Hello everyone, this is Martin. It is Sunday afternoon, broadcasting on this beautiful, warm, hot day. Some may say it is a heat wave here, and I believe it's over 30 degrees Celsius. With the humidity, feels like almost 40. So things are looking pretty good weather-wise. Hopefully everyone's having a great summer season, and hopefully your trading is going well. So let's start by looking at these currency pairs. This is an update for the upcoming week, the August the 17th to the 21st. So we are now going to start with our first currency pair, the Euro USD. Okay, for this first currency pair, first of all, let's take a look at the overall direction. We're still in an uptrend, and however, we're very cautious. Price seems to be consolidating in a major way between the upper and lower trend lines. You can see that right here, and the MACD is above zero. So what we're looking for is price to come back down and validate this gray rectangle, which is support. Now, last week, starting here with the red vertical line, you can see right here, price was right here, and I mentioned that we were to wait for price to come back higher up to this gray rectangle, and look for a bounce back down, and then look for bearish evidence to the downside. Now, price instead went right through the major 50 SMA all the way up, created a brand new resistance area, which tested the previous swing high right here. You can see that on the left side, and did then bounce back down again. So what's happening is price is now, we're looking for price to validate this zone right here. Remember, price broke up higher. Price is now coming back down. And if price bounces off this gray rectangle, which is support, and goes higher, that means this zone is now substantiated as a proper support area. If price actually breaks back down this way, beyond the support zone, that means then the bears are still much stronger than the bulls, and the bulls have not established their support zone right here. So again, this is a wait and see situation. If price breaks below the 110 area, I would take a sell trade. If price bounces off the 110.80 area, bounces off, and you see some bullish evidence, I would take a buy trade. But just be aware that we are in a triangle consolidation. If price goes higher, it may only go back higher up to about here, up to about 1220, I should say. So if price does go higher, maybe don't do anything. Just wait for price to break out above the 112.20 area. Okay, and again, you can see MACD is above zero, and we are now going to go to our next pair, which is the British Pound USD. Now, this was an easy one to look at because last week we mentioned that price was just basically going sideways. In fact, last week we started here at the red vertical line, and if we would have waited, we might have gotten some pips, because sideways channels means waiting for price to bounce off a lower channel line. In this case, you can see came down, then went higher. Okay, or waiting for price to come up higher, bounce back down, and go lower. I will just demonstrate that. So in channel trading, we're looking for price to come back down and then go higher. Okay, or we're waiting for just a second here, waiting for price to go higher and then bounce back down to go lower again. So this is what we're kind of looking for when it comes to channel trading. And the other idea is, of course, waiting for a price to break above the 5710 area, wait for price to break below the 5450, which is the support zone here. So again, it looks like a lot of these pairs that we're going to be looking at this week are actually consolidating sideways again, whether they be in a triangle or whether they be in a proper channel like this. horizontal channel, and that's because we're in the middle of the summer doldrums, or right in the middle of the Bermuda Triangle, if we want to use another word, and that means that trading is really not going anywhere. There aren't any major trends at this point in time. There's a lot of erratic trading going up and down. There's high volatility because of the summer holidays. There are a lot of major traders that are on holidays, and the volume is a bit lower. So trading is going to be a little bit more erratic, and we can only see what we can see in the charts, and hopefully make some pips. But this is what I'm telling you: summer trading is not always the best. Trading will get back to normal after September rolls around the corner. So that's what I see here with this pair. And the next pair is the Australian USD. Now, here I've created a channel, a bearish pennant, you can see, with this upper trend line, this lower trend line. Lower trend line is angling downwards, which kind of says to me that price may go a bit higher, but may come back down further. Price, in fact, may come back down a little bit further and further and further to test the previous low right here. And so what I'm looking for with this pair is for price to bounce up to the 74.30 and then take a sell trade, looking for bearish evidence, or waiting for price to come back down to at least this gray rectangle, bounce back up again, or if it breaks this gray rectangle, then price should come back down further to at least the trend line here. So on the downside, you can look for a price to break or close below the 73.30 and then take a sell trade down. If it breaks below here, it probably will come down a lot further. The MACD is below 0. We are in a major downtrend, as you can see with this red cloud right here. Okay, and so that's that pair. Now the next one is the New Zealand USD. Okay, with this pair last week, again looking at this vertical line, I mentioned that price, we should wait for price to bounce higher all the way up to this zone right here, and then look for bearish evidence to the downside. Now that did not happen. Price in fact just went up, actually went down the next day. With this bearish engulfing candle, went up the next day again due to erratic summer behavior. Again, small candles, the next one down, all contained within this large white bullish candle. So again, just basically going sideways. I kind of expect price to kind of go down further, but again, I could be wrong. And if price goes back down, it'll at least hit the area 64.50 area. So you can either wait for price to break below the support, the 64.50, or wait for price to go up higher to at least this new minor resistance area of the 66.50. Wait for price to go higher, okay, and then wait for a bounce down for a sell trade, looking for bearish evidence to the downside. MACD is still well below 0. We are still in a major downtrend, as you can see with this red cloud, and price is also below the this 50 SMA. So there's no reason why price shouldn't go down further, although we are just in the sideways consolidation zone. And again, wait and see. Now, next pair is the US CAD, and this pair is also trading sideways. You can see I've drawn a upper trend line, a lower trend line. Again, it's going sideways. You can see this pair is really down, up, down, up. There is no real pattern to this, and partially it's news driven. The news for US and Canadian dollar comes out almost at the same time. News sometimes is good for Canada. News may be good for US. One news event negates the other news event, and so it's just going up and down. It's really hard to make any sense of this pair right now. But basically, we are still in a major uptrend, as we can see by this green cloud. Price is still well above the the 50 SMA. The MACD is above 0. I believe price will still go higher, at least up to the trend line here. And I'm looking for a short minor resistance area of 130, 150. If price closes above the 130, 150, you can see that right here, then I would take a buy trade to at least retest the previous high and then possibly go higher, because there's still a lot of room to the upside here. And on the downside, if price comes back down, just look for a break below the 129.30, which is the support zone right here. Okay, so that's what we're looking at with this pair. The next pair is the USD Swiss franc, and I've drawn in an upper channel. You can see this uptrend channel with this lower trend line, this upper trend line. I've even drawn in a middle line, so you know, dividing the upper half with the lower half of this channel. So price basically is just going up and down between the upper and lower lines, and I kind of expect price to kind of keep going higher. However, it's probably going to bounce down lower first, so look for a bounce down to the 9,700 area, and then look for bullish evidence to the upside, or price breaks above. And I put in another minor resistance area. If price breaks and closes above the 98.15, 98.20 area, then you could take a buy trade, and at least the price will continue to go higher to at least retest the previous high right here. Although, remember, this is at a major high right up here. So again, there is still a little bit of room on the upside, as you can see with this upper trend line. If price comes back down, you can take a bounce going higher as well. So again, that's what I see on that pair. And finally, we've got the US Japanese pair. Okay, before we actually look at the US Japanese pair, I want to go back once more to the US Swiss franc. Forgot to mention last week at this red vertical line, that's where the week started, and I mentioned that we were to wait for price to go up higher and then look for a bounce at the resistance. Price, in fact, if you would have taken the next candle right here, price did in fact go up, and you would have made about 52 pips to the upside, so that would have been pretty good. So not all in vain before price was slammed right back down again with this bearish engulfing candle. Okay, so now let's go to the US Japanese, and same thing last week, again starting this red vertical line. I mentioned price was going to go or should be going higher, and you could wait for a breakout above the resistance of the 25.10 area. In fact, price on the next candle did go up much higher. If you would have taken that trade, that would have been good for about 62 pips. Again, not bad. And then I also mentioned you could wait for a breakout above the resistance zone at about the 125.10. You can take a pending buy stop order above the 125.10. In fact, price went up higher and then slammed right back down again. So this is what I call a false breakout. Price went up higher, took out all the stops and all the buy orders. Price came right back down with this major engulfing candle. So kind of a bummer there, but for those people that possibly had pending buy stop orders here, again, all driven by the summer erratic trading, and really it's really it's hard to foresee this kind of thing happening, but all we can do is get out of a trade and get into another trade. And again, here we're looking for either a breakout below the 124.100 area, okay, or wait for price to go back higher on bullish evidence. So that's what I see over here. We are still in an uptrend. MACD is above 0, and again, waiting for a bounce to come back down, and then waiting for bullish evidence to the upside. So take care, everyone. Happy trading for this coming week, and hope to hear from you. Send me any questions that you have. Take care.